So this is the question paper for MayJune 2017. It's the second paper. It's 2 hours long. It's out of 100 marks. Obviously, you'd be looking at the proposed timetable, and you're going to be starting with the question you feel most comfortable with. So obviously, look at question 1, 2, 3, and 4. You can see 4 is a short question. It's 10 marks. It's 12 minutes. It shouldn't take long to do. So if we're looking at exam technique, we'd be starting with question 4 first. At least then we've got easy marks in terms of the MCQs or short calculations, depending what they've given you there. There might even be formulas or ratios depending on what they've tested. So you could start with question 4 if you wanted to. It's short, or you could come back to it later on. I'm just going to follow the order of the questions, and I'm going to look at question 1 first. Question 1 is looking at partnerships, so we need to revise and discuss that. We've actually revised and discussed a bit of that in the previous assignment that you had to do. So we looked at a bit of the basic theory around it. Don't forget, you can revise. You've got all the videos from last semester if you need to cover specific sections. This is obviously looking at disclosure, and you can see they've asked you for 2 things: statement of profit and loss and other comprehensive income, and appropriation account. So if that's the required, what are you going to be focusing on? What types of accounts are you going to be looking at?
Appropriation. Isn't that with appropriation, won't it be CCs, so members?
No, this question is focusing on a partnership.
Oh, okay.
So appropriation is used to appropriate the profit between the partners.
Yes, within the business, and the ratio.
Yeah, you'd need a profit sharing ratio, but that must be given in the question.
Yeah.
Okay, so looking at this, you can see that we're preparing a statement of profit and loss and other comprehensive income. So what must we do for that? What are we going to be looking at? What should we be thinking about?
It's financial assets and liabilities.
No, not in the statement of profit and loss. How do you calculate a profit?
No, it's capital.
Capital wouldn't be part of this statement. Capital would be part of the statement of changes in equity.
So profit and loss.
Statement of changes in equity, capital and drawings. Statement of financial position, assets and liabilities.
Isn't that sales and expenses, profit or loss?
Yes, income and expenses.
Income and expenses, yes.
Okay, so that's what you're going to be looking at in this particular question, okay, A. Then in B, you want appropriation. So what are you thinking about there? What goes into appropriation? See, this is theory. Theory you need to study, theory you need to go over, and you need to learn. Right, then you need to practice applying the theory. And that's what we're doing here. Okay, so that's why I said, go back and look at the theory, okay, from the study guide as well as the textbook. And then, when looking at the week-by-week practicing, we need to actually cover the questions in order to get better at answering the questions, so the right exam technique.
Yeah.
Okay, because you're writing in about a month's time.
The exact date, I think it's the 24th.
Yeah, it's in October, right?
Yeah, October the 24th.
So it's already what? Today is the 18th. Yeah, so just over a month.
Yeah, because I've got to exam the 17th.
Yeah, so there's quite a bit that you obviously need to do in terms of practice if you just keep going week by week. So you should be at least doing 1 past paper a week. That should be more than enough time, or let's say preparation, in order to get to your exams. Okay, so you need to just keep practicing. Remember, I've had a student in the past where they didn't cover as much of the theory, but they just went over past paper after past paper after past paper, and they literally did it from like start to finish. So doing the question is important because you need to see what are you doing, okay, when you are given a question like this, right? And then you need to review your answer with the answer that I'm creating for you, and then you need to check, well, am I covering everything that I'm supposed to, or am I leaving out certain things? If you're leaving out certain things, then you need to fix that, and then you need to try and improve going forward. Then the next past paper you do, you need to try remember what you did previously, and try and improve on that. So hopefully it gets better and better and better, so by the time you write the exam, you should have covered all the past papers, and then you should be ready to write Do you
Yeah.
have a study timetable or like a program that you're following?
Not at the moment because I've been so busy. I've been going to bed at like 2 o'clock in the morning lately because of my assignments. I've just got one more, but now that now they've only got one more assignment left, I'm starting to study this week.
Okay, well, what's your first exam? You said you're writing in about a month's time.
It is law.
Okay, so you're writing law first and then accounting after. That's the second paper.
Yeah, and then MNR and then MNG.
Okay, yeah, so just try, obviously those other exams sound like study subjects. So study subjects, you obviously need a good memory, but with the subject like this, it's a lot of practice. It's like your maths when you did your DSC. Okay, you can't study that subject. You have to practice it. Unfortunately, that's just the nature of the topic. Okay, so obviously I've studied the theory, and now I know what the statements are in terms of their focus. Appropriation, we said, is going to be profit sharing. That's what we're looking at there, profit sharing. So what must I do? I need to create my templates. Okay, so question 1A. Statement of profit and loss. Comprehensive income. Okay, so what does that statement look like? Well, we've got a sales line item, we've got less cost of sales, gives you gross profits. Okay, cost of sales, depending on what system they give you. If it's perpetual, then I'll be given cost of sales. If it's periodic, then I need to calculate cost of sales using the equation. Okay, then it's a separate working calculation. Right, then we'll have other income, other expenses. You can group it differently depending on disclosure. I'm just keeping the disclosure simple. And then you'd have profit for the year. Will there be tax and profit before and after tax? No, there won't be for a partnership. Because does a partnership pay tax?
No.
No, the partners pay tax. So each of them have to pay their own tax on the amount that they receive.
Yes.
Okay, so that's the strategy. Get your template right. Okay, obviously, I'm still going to have to draw up an appropriation account, so let's do that as well. Okay, that was the second part. An appropriation account is a T account. So you're going to have a debit side and you're going to have a credit side. So draw up your answer. Okay, because in the exam, same thing will apply. You'll be given folio paper, and you're going to have to create all these things, and then you're going to have to answer the question, and you're going to have to capture all the information from the question into the answers that you've got. Appropriation accounts. Okay, now you're ready to go back and look at the information and get marks. But in every single past paper, there's always going to be easy marks and then marks that require calculations. Okay, so obviously the first step is to look at the question and look at the balances that's given. You need to go down the list and you need to identify what things are. If you know what something is, then you'll know where it needs to go. Okay, what am I focusing on here? Let's go back to the required statement of profit and loss. So that's income and expenses, and I'm looking at the appropriation account, which is the profit sharing. Okay, that's what I'm looking at. I'm not going to worry about anything other than those two statements, because if you want to draw up the statement of financial position and the statement of changes in equity, you can, but you're not going to get more than 37 marks for this question. Okay, then you're wasting your time and you're wasting your effort, okay, drawing up things that aren't required in terms of the question. Right, and that's why the required is so important. So make sure you know what is being asked for, and then when you go through the question, you're identifying the stuff that's going to affect these two answers. Okay, profit and loss and appropriation. That's all I'm going to be considering. Okay, so let's go back to the beginning. Let's get the easy marks. Okay, You can probably see this on your side. You couldn't print out a copy, but that's fine. Once your laptop is working again, you can print it out and you can maybe redo the question, then check it with the answer again later. Alright, but now I want you to tell me what each of these things are. Okay, so go down the list, tell me what they are.
Okay, capital is capital.
Do I need it?
No.
No, capital we said goes in the SOCI.
Yes.
Land and buildings.
No, that's an asset.
Correct. Asset would go to the statement of financial position. Don't need it. Current account.
No.
Correct.
So,
current account would go in statement of changes in equity.
Yes.
Long-term loan.
No.
What is it?
A long-term loan is a liability.
Good.
Non-current.
So financial position, right?
Yes.
Trade receivables.
It's a liability.
Correct. Next.
Accumulated depreciation. It's a negative
No, hold
asset.
on. Did you say liability for trade receivables?
No, it's an asset.
Okay. Trade receivables is an asset because you're going to get something.
Payables is a liability.
Payables is a liability, yeah.
Yes.
Okay. Accumulated depreciation.
Negative asset.
Furniture and equipment.
Asset.
Allowance for credit losses.
Negative asset.
Inventory.
Inventory is asset.
Yes, okay, but when you see inventory and when you see purchases together, what does that mean? Periodic, right?
Yes.
Okay, so if it's periodic, do I need the opening balance? Yes. So I already know that there's going to be a calculation here for cost of sales.
Yeah.
Okay, so there is a calculation. Cost of sales is what? Well, opening stock. See, this is revision. See, stuff like this you need to learn. Opening stock plus purchases less purchases returns add other costs less closing stock gives you cost of sales. Okay, so I'm going to show that as a separate calculation on the right. You can show it as part of your disclosure if you want to. It's up to you. Okay, so you can obviously move things down a bit here and you can show the working in your actual statement, or if you show it separately, then just reference that this is a working. C working for cost of sales. C working for cost of sales. Okay. So in the question I just read, inventory 1st March, is that beginning or end?
1st March is beginning.
It's beginning because the balances here were given for 28 Feb 2017. So that is the opening stock. So 80,500 is my opening stock. The next line item I can see is purchases. So I need both for calculating the cost of sales. So 80,500 and 501. 80. Yes. 500 and 501. There's your opening stock, there's your purchases. Got that?
Yeah.
Next, what is it?
Which are we on purchases now?
No, we've just looked at it.
Oh, interest expense on long term. It's a liability.
No, interest expense.
It's expense. It says right there, it's expense.
Yes, interest expense is an expense. So it'll be part of your financing costs. Okay, so again, you can show financing costs separate from other expenses, or you can just group it together. I'm just going to group it together to keep it simple. I'll write financing costs, finance costs, interest on long-term loan. Okay, in brackets, I'm going to get an easy mark just for knowing that it's an expense, 1,800. And that's what I put there. Okay, if I need to work out something, then I'll work out something later. Right now, I'm building an answer and I'm getting half marks here and there for my workings. Okay, for my basics.
Yeah.
Stationery, what is it?
It's expense.
Yes, 605. Insurance on purchases. The keyword is there.
Yeah.
What is this?
It's expense.
It's an expense, but it relates to
Periodic.
cost of sales, periodic, yes. Okay, so other costs, okay, I'm going to give it a name. Other costs would be insurance on purchases. And I'm going to add however much it was. What was it? 900. Insurance on purchases. Okay, what's after that?
Carriage on sales. That has to go in the formula.
No, carriage on sales is carriage on sales, not carriage on purchases.
Okay.
Okay, so if it's carriage on sales, it's what? An expense. Do you agree?
Yes.
Okay, it's not part of your purchases, it's part of your sales. So this will be shown as a separate line item, 1,500 here.
Yes.
1,500 carriage on sales.
Yes.
Settlement discount received, what is it?
Settlement discount received. It's asset.
No, it isn't.
Received. So you are the debtor. No, you're the creditor. If
No.
you're receiving,
Think about it. Okay, when will a settlement discount received account occur?
When there's allowance.
No. Who do you have a settlement discount with?
A company.
Yes, your
So-
supplier.
So you paying them.
Exactly.
They're giving. Yes,
That's
they're
correct.
giving.
Okay,
Yes.
so if you're paying them, can you
You're-
receive a discount?
You can.
You can, if they give you discounts. So
Exactly.
here they are. So what is this going to be viewed as?
An income.
Yes. Okay, you're getting a discount. Settlement discount received 500.
Yeah.
Wrong place. Here, other income. Okay, next. Salaries and wages. What is it?
Expense.
Good. Rent expense is an expense. So those last two also need to go to the statement of profit and loss. Salaries and wages 6.5. Then rent 2,000. Okay, so salaries and wages 6.5, and rent expenses or rent expense 2,000. Okay, those are the last two expenses. And then you had bank overdraft. What is a bank overdraft?
A bank overdraft is a liability.
Exactly. Right, so I don't need it. Okay, so now we need to go through the dish information. So we've looked at the trial balance. Now we look at the dish information. First thing in the dish information is notes about the agreement between the partners. They tell us interest at 4% and 7% per annum is to be allowed on the opening balances of the partners' capital and current accounts. Is this something that I'm going to need for my statement of profit and loss or my appropriation account?
Interest on your... No, you won't need it at all.
Why won't I need it?
Because it's dealing with capital.
It's dealing with capital, but this is interest on the capital and interest on the current account. So what is interest viewed as from a partnership point of view?
Expense.
Yes, an expense for who? The partners or the partnership?
The partnership.
Exactly. Okay, the partnership is going to have to pay it. So what
Yes.
account shows the partnership's, inverted commas, paying of interest or getting interest?
Sorry?
What account shows the partnership
What account?
as a whole?
Members' contribution.
No, members' contribution has nothing to do with the partnership question. Members are members. Members are part of a CC, not a partnership.
Yes.
Okay, so a partnership has what account representing the partnership?
Okay.
What account?
A partnership.
What account shows you what the partners have?
A capital account.
No, that shows you what each partner has. What shows you what the partnership has?
Appropriation.
Yes. Okay, that's the only place where you're going to show what the partnership has.
Yes, okay.
Okay, so if you're charging interest on the capital and the current accounts, okay, let's first look at interest on capital. If it's interest on capital, is the partnership going to have to pay it or not?
The partnership will pay it, not the partners.
Yes, the partnership will pay it to the partners. So if I'm looking at interest on capital, okay, there's the capital, M and V. Okay, that's the capital. Right, this is interest on capital. So what is interest on capital going to do to appropriation? Increase or decrease it?
It will increase it.
It'll decrease it because the partnership is going to have to pay it.
Oh, okay, okay.
Okay, so 28 Feb. Interest on capital M and interest on capital V. Right, M has how much? 400,000. What is the rate? 4%. Okay, so 400,000 times 4% is what M gets. V,
yes.
600,000. That's the capital. So interest on capital is 4%, so 4% of 600,000.
Yes.
Ooh, 4%. Oh, not minus, times. Wrong symbol. Okay, there we go. Right, so 400,000 times 4%, 600,000 times 4%. Okay, what else must you charge? 7% on their current accounts. Okay, so let's look at their current accounts. They're their current accounts. Okay, so if you're charging 7% on those current accounts, is M in a good or bad position with the partnership?
Is M good?
No, M is in a bad position. Why?
Oh, looking there, I'm looking at 400. Sorry, it's because it's being debited and that's minusing, so it's bad.
Yes, okay. So what does that mean? That means M owes the partnership.
Yes.
Because M has a debit balance.
Yes.
So if M is owing the partnership, when he's being charged interest, is the partnership going to get something from M, or does the partnership have to pay something to M?
M is going to have to pay the partnership doesn't pay M.
Exactly. Okay, M is going to have to pay the interest. So what is that going to do to appropriation, debit or credit?
It's going to credit it.
Yes, it'll credit the partnership. Okay, obviously there's going to be a profit line item here that we need to put in. Okay, so profit slash loss. We need to work that out later. And then we'll have 28/2. Interest on current account M. Okay, the interest was 7%. So 7% on 2,000. 0.7. 7% on 2,000. That's how much M is going to have to pay the partnership. Okay, was V in a good or bad position?
V was in a good position.
Correct. So is V going to get more from the partnership?
Yes, it's going to get 5.
Alright, V is going to get 7% on his credit balance of 5,000. So that's going to go on this side.
Yeah.
$5,000 times 7% gives me $350. That's what V is entitled to from the partnership. Okay, so now have we looked at point number 1? Yes. Let's look at point number 2. Do I need point number 2? Yes or no?
Point number 2, Vanilla is entitled to managerial salary. Yes.
Why do I need it?
Because it's part of the appropriation to say how much V gets.
Correct. Okay, so V is being given a salary of 6,000 per annum from the appropriation of the partnership. Okay, because the partnership is going to pay this to V.
Yes.
Right, so V is going to be getting a salary. Salary V was how much? 6,000 per annum. Okay, it's just one amount of 6,000. If it was per month, then you'd have to times it by 12. Just read the question carefully. Okay, next, do I need point 3?
Each partner is entitled to a salary amounting to 4% of... Yes, that is needed.
Correct. So now there's an additional salary. Do you agree?
Yes.
Okay, so another salary, 28/2. What is it? 4% of gross sales. So 4%. Well, let's just write salary M bracket 4% of sales. Okay, and then salary V 4% of sales. Okay, what was my sales figure? Go back to the question, look for it. Do you see a sales figure in the question?
Sales.
No, there's nothing in the trial balance, right? So I need to go and I need to look at the addition information. I'm looking for my sales. Year-end adjustments. This is talking about a debtor. Number 2 is talking about a write-off. Number 3, loan interest. Number 4, depreciation. Number 2.5. There we go. Do you see that?
Yes, I do.
During the year, each partner received 15,000 as a salary. The transaction is still to be recorded in the books of the partnership. Must I record?
Yes.
Yes, I do. Okay. And I've also got something else here. Have a look at that. Profit markup of 20% on sales. Is that important?
Yes.
Yes. Okay, because that's the markup. Okay, so 20% on sales is the markup. Here they tell you that during the year, each partner received 15,000 as a salary. So can I put that in? Yes.
Yes.
Okay, so again, side working, separate calculation for the sales. Right, so you know that 4% of sales equals 15,000. Okay, 4% of X, or 4% of X is 0.04. 0.04X equals 15,000. Solve for X. Okay, if I solve for X, I'm going to have 15,000 divided by 0.04 gives me 375. Do I know what the sales is? Yes, sales are 37000. Okay, there's an amount. Okay, because the question said 4% of sales is your salary. So if you've got the salary, can you work out the sales?
Yes.
Of course you can. Right, so where am I going to put this? Statement of comprehensive income. Sales, right?
Yes.
375. Let's insert. 375000. There we go. Now we've got another mark from our sales. Obviously there was a working for that. We had to calculate it here, and that was part of the appropriation. Okay, this would have been part of my workings at the end of my answers. Okay. Alright, so now I've looked at 2.5. I've recorded the transaction. Okay, and I've counted or calculated the sales. Okay, let's go back. Where were we? We were at point number 3. Okay, so point number 3 I can tick. I've now looked at it. Am I going to use point number 1.4?
1.4 bonus equal to 10%. Yes.
Yes, you would. Okay, correct. So 10% of the distributable profit. Do you agree?
Yes.
So distributable means what's paid to the partners. Do you agree?
Yes.
Okay, did they give you a profit line item in the not income statement, in the, well, you're drawing up the income statement, but did they give you a profit line item here?
Profit line item, no.
No, they didn't. Okay, there's no profit here. Okay, they tell you it's 10% of the distributable profit. Do you agree?
Yes.
And then later on, we read a note here. The profit markup is 20% on sales.
Yes.
So can I work out the profit from the sales?
Yes, you can.
Yes, I could. Okay, so let's write that down. Profit markup is, what is it, 20%? Yeah, 20% of sales. Okay, so do I know what the sales are? Yes. So do I know what the profit is?
You have to work it out.
Yes. Top profit will be 20% of 375. 1, 2, 3 equals an amount. Let's see what we get. 375 times 20% is 75,000. Okay, so that would be a profit that I would have in terms of the actual sales figure. So is that going to go to my appropriation? Definitely. Okay, so here's my appropriation. We just worked out a profit figure. I'm going to put 75,000 there. Okay, 75,000 is the amount of profit that is distributable to the partners as part of the appropriation account.
Yeah.
Makes sense?
Yes.
Okay, good. Let's go back. Let's carry on where we left off. Okay, so now I've read that bit, and then they said a bonus equal to 10% of the distributable profit is payable to menu. Okay, so this is a bonus of 10% is distributable. Of distributable profit. So I need to put the bonus here. Okay, bonus M. Okay, bonus M is going to come from the profit calculation. So that's the profit that you've got, 75%. Okay, but we need to work out what is the distributable profit. So distributable profit. Okay, the distributable profit is after the partnership has compensated the other line items, okay, first before paying out the partners. Right, so I need to get from profit that's basically before distribution, okay, and then distribution. Right, so what must I take out of this profit? Well, I need to less the interest on capital. Okay, bracket M plus V. Okay, so interest on capital you had earlier. Let's add the two. There's my interest on capital plus the interest on capital. Okay, what else? We also need to less the interest on current accounts V. Okay, what is that? That's current account V, that's the 350. Okay, then we've got three salaries, three salaries, yeah. And then less salaries to partners. Okay, and the salaries to partners would be the 6,000 plus the 15 plus the 15. Okay, what else? We've still got interest on current account M. This is going to be added. So add interest on current account M. And the interest was 140. Okay, so you worked all of this out. You just need to calculate the distributable profit. Okay, and I can't finish this yet until I know what the other adjustments are. Okay, so I'm going to leave bonus here, and obviously the bonus needs to be completed a bit later once you've gone through the rest of the dish information, because there might be other things that will affect this account. Got that?
Yes.
Okay, so let's go back and let's carry on. Okay, so I would asterisk number 1.4, I'd have to come back to it. Okay, the bonus here is brackets 10% of distributable profit, which we don't know yet.
Yes.
Okay, Let's read point number 2.1. Is point number 2.1 important?
An amount of 2,000 owed by debtor was written off as irrecoverable during the year ended 29 of Feb 2016. The debtor has been traced to Orange Farm, a township in Gauteng, and has settled the amount previously written off in full. This transaction is still to be recorded. Yes.
Do I need it?
Yes.
Yes. Where do I put it?
As income.
No, what are they describing? What did they describe?
That they wrote off an amount, now it has been paid.
Yes, okay, so an amount of 2,000 owed by a debtor was written off during the year 2016. Okay, so the debtor is traced to a township and they're settling the previous amount in full. So is this income?
It's expense.
It is an income, you're right.
Yeah,
so now,
that's
what is
I
it viewed as? Tell me what it is.
An income.
Yeah, but what's the term for the income? What's the name of the income?
Accrued income.
No, it's not accrued income. Accrued means you're still going to get something.
Oh. I don't know.
Bad debts or credit losses recovered.
Okay.
Okay, so that's an income. Bad debts or credit losses recovered. I'm going to use the word credit losses. Credit losses recovered. Okay, and the credit losses recovered was how much? 2,000.
Yeah.
Right, and that's it. Now you've looked at that point. Okay, remember these are year-end adjustments. Okay, so if it's a year-end adjustment and you haven't recorded it, it needs to affect your profit. Okay, so down here at the bottom, I need to keep considering what's happening here. Okay, so add credit losses recovered. $2,000. Okay, now I've looked at point number 1.2. Okay, do I need point number 2.2?
An outstanding debt of 300 is irrecoverable and must be written off the allowance. Yes, you do need it.
Where are you going to put it?
As expense.
Correct. Okay, so simple answer to the first part is credit losses. 300. Straight from the question. Irrecoverable, write it off. You have to provide for it. Okay, then adjust your profit. Less credit losses. 300.
Yeah.
Okay, do I need the second part?
The allowance for credit losses must be maintained at 5% of trade. Yes, you will.
Yes, I do. Okay, so what are my trade receivables?
An asset.
Yes, and how much is it?
Trade receivables 53,300.
Okay, what is 5% of it?
Let me work it out. 53,300 times 5%.
2665.
Yeah, 2665.
Okay, what is the current allowance?
2105.
So is this going to go up or down?
It's going to have to go up.
It's going to go up. So how do you increase a negative asset?
By crediting it.
Yes, so if you credit the negative asset, you're going to debit the
Bank.
credit losses, bad debts.
Yes.
Okay, so let's show that working. Here, credit losses plus open brackets 2665, which is the amount which is calculated, 5%, minus what was the current existing allowance? 2105. 2105. Close brackets. Close brackets gives me an amount which is representing the credit losses. Does that make sense?
Yes, so you need to increase it by 560 Rand.
Yeah, so 560 plus 300 is 860.
Yes.
Okay, so 860 goes there, and then I'm going to have to adjust the allowance here. So less the adjustment for credit losses. Okay, which was the 560.
Yes.
Okay. Next. 3.3, do I need it?
I can't see it.
I mean 2.3, do I need it?
3.3. The long term.
2.3, sorry, 2.3, not 3.2. 2.3,
Yeah.
this one up here.
Yes, the long-term loan from V bears interest at a rate of 12% per annum payable on the 15th of July every year. The capital amount of loan will be repaid in full on the 29th of Feb 2020. Yeah, you will need it.
Okay, good, you will need it. Okay, and it's considered what? Interest expense, interest income.
Interest expense.
Interest expense. Okay, so 12% per annum payable on the 15th of July every year. So I need to know how much the interest is. Let's go and find the loan. Long-term loan from V, 40,000, right?
Yes.
Okay, so 40,000 times the interest rate of 12%. Okay, so let's go to our working. We had interest on long-term loan there. Okay, so in brackets 40,000 times 12% equals 4,800.
Yes.
Okay, so what am I going to do with that? I'm going to show that here. Financing cost, that means financing cost is going to go up. So plus 3,000. Okay, because there's 1,800 here. So the financing cost, the 3,000 will be viewed as what? What type of adjustment is the 3,000?
Allowance adjustment.
No. Let's look at interest.
So interest expense.
Well, the interest expense is 860. What is the 560 portion representing?
Won't it also be an interest expense, or what? It won't be an income.
No, it won't be an income. It will be seen as a liability.
Okay.
You still need to pay it, right?
Yes, but then will you need it because we're not dealing with liabilities?
Yeah, we don't, but we need to consider it in terms of the adjustment. Okay, so obviously we would show 4,800 here, and it's being adjusted. This line is being adjusted for an accrued expense of 3,000. Does that make sense?
Yes.
Okay, it's only the difference that you need to capture. Got that?
Yes.
Good. Okay, what's next?
2.4 depreciation of furniture and equipment for the current financial year is still to be provided at 15%. You won't need it.
I do need it. What is depreciation?
Yeah, but wouldn't... But it's working with assets.
It's an asset, yeah, so you're not going to disclose the assets, but what is depreciation as an account?
Negative asset?
No, that's the provision for the depreciation, the accumulated depreciation. The accumulated depreciation is a negative asset. The depreciation is a...
Is expense.
Yes. Okay, must the depreciation be disclosed?
Yes.
Of course it must. Right, so depreciation, open brackets. How am I calculating it? 15% per annum on the diminishing balance method. Okay, so furniture, it's 15%. Yeah, it's 15%. Okay, where's my furniture and equipment? There's my furniture and equipment. There's my two amounts. 35,000 and then 3,500. Okay, so depreciation is going to be open brackets, 35,000 minus 3,500, close brackets times 15%, right? What is the depreciation rate? Let's just go back and check. Yeah, 15% is correct. Okay, so let's see what we get there. Brackets, 35,000 minus 3,500, close brackets times 15%. gives you 4725. That's an expense. It must be disclosed here.
Yes.
Okay, do I need 2.6?
2.6. Inventories on hand. Yes, you will.
Of course I will. Okay, if it's inventory on hand, how am I going to adjust?
Inventory on hand. Won't you adjust it on trade receivables?
No, not trade receivables. What's happening here? It's stock, right?
Yes.
Okay, so this is inventory on hand. Merchandise is stock. 61,000 is what? My closing stock.
Yeah.
Okay, earlier we spoke about closing stock. Now I've got it. Okay, I'm going to put 61,000 there because that's my closing stock.
Okay.
What else do I have? Stationery. Okay, do I have stationery left over? Yes, so that's the leftover amount. Do you agree? So if it's left over, is the stationery too high or too low?
It's too high.
It's too high, it's correct. Subtract 100 from the 605, gives you 505. And there's your stationery adjustment.
Yeah.
Okay, we still need to adjust though for that here. So where's my, yeah, there's it there. Less stationery not used. Stationery on hand. That's why they use the correct terminology. Okay, how much was the stationery on hand? It was minus 100. Okay, let's go back. Am I finished with the question? Yes, I've gone through everything, right?
Yes.
Okay, you've read every single line item. The only line item that we said we can't do that we're going to go back to is this one. The bonus.
Yes.
Okay, but to get the bonus, I need the profit. Right, so let's go and let's sum up everything. Sales is 375. Okay, my opening and closing stock. Let's see what I get. Opening stock plus purchases. No returns in this question. Minus the add, not minus, subtract. Okay, plus the purchase on returns. Purchases on returns. Insurance on purchases. No purchases returns. Okay, and then minus closing stock, minus that figure. Okay, gives me an answer of opening plus purchases plus insurance on purchases minus closing gives me that figure.
Yes.
Did I minus closing stock? Yeah, I did. Okay. Okay, perfect. Right, so looking at this, your sales minus your gross profit, this is actually going to be a loss. Okay, loss there. Discount received, 500 here. Okay, then all these expenses. Carriage on sales didn't change. Wages didn't change. Rent expense didn't change. Okay. Alright, so now we need to sum up and then we need to calculate the bonus. Okay, they gave us a profit figure. So can I work that out now? Well, yeah, I had the profit figure here of 75,000. Okay, that was the profit figure that we calculated from the question given, the information given to us in the question. Okay. So looking at this then, there are probably going to be other sales line items that you probably have to consider. Because they said the profit markup. Profit markup is 20% on sales. Because if it's 20% on sales, it means it's 20% on what it was. Okay, which is what the sales were, which is the profit, or which is what we had. Okay, so we should calculate that correctly. Profit markup is 20% off sales. Okay, so we worked out the sales because they told us that 4% of the sales was the where was it? Was the salary, hey? Let's just go back and see that. Where was that salary line item? Yeah, here's it. During the year, each partner received 15,000 as a salary. The transaction is still be recorded in the books of the partnership. Okay, I don't like the way they've worded this question, because is this 15,000 for the year or is it per month?
Exactly.
Okay, it's not very clear. You could maybe assume it's for the year, because earlier we had this. Where was it? Here, 6,000 per year. Okay, so it's difficult to determine if this is for the year or not. Looking at my question, if you use the sales figure there, you get a loss, which isn't actually correct, because there should be a profit for the year. So it's probably maybe per month, possibly. Okay, 15,000 as a salary per month. That could be it. So if it's 15,000 as a salary per month, then it's going to be times 12 to get the full year, which is going to increase their entitlement. Okay, it's difficult to say what they wanted you to use here, per year or per month. But I think maybe just to keep it in line with what we had earlier, which was the per year, I'm going to keep it as per year. I'm not going to change it. So I'll leave it as, where was it? Here. Salaries to the partners as 1515. Okay, so 4% of sales. 4% of sales, which we worked out as 15,000. So that gave us the 375, which is fine. Okay, so 375 was the percentage of the sales that we had in the question, because they tell you that each partner is entitled to salary amounting to 4% of the gross sales of the partnership. Okay, so that definitely would relate to what we saw here at the bottom. Okay.
Yeah.
All right. So it's, as I said, yeah, it's not going to balance off because of this discrepancy here in terms of landing up with a loss, not a profit. Okay, because your cost of sales was your opening stock. Unless I put too many zeros here, let's just go back and check. Yeah, purchase was 501. Yeah, 501. Insurance was that. Closing stock was 61. Yeah, okay, there's nothing wrong with that calculation. So cost of sales would be as is. Okay, so we've read that. What else do we have? That was it. That was what we had there. Now we can just sum up and total up. Okay, so other expenses equals sum up all of this. Okay, gives me that answer. Okay, and then obviously the profit for the year is actually a loss for the year, because it will be in the gross profit plus the other income. Okay, the other income we need to add, and then minus the other expenses. Okay, this would be 2,500. Okay, your discount plus your credit losses recovered. Okay, so that would be our profit for the year figure, based on the information given in the question.
Yes.
Right, so now what must I do? I need to look at the appropriation account. Okay, so appropriation account, let's go back and let's balance off. So I had that profit, I added and subtracted all these figures. Let's see what the distributable profit is. Okay, so the distributable profit is going to be equals 75 minus this, minus that, plus this, minus this, minus that, gives me an answer of 170 as a very small loss. Okay, so tiny little loss experienced here for this particular business. Okay, because that was the profit, 20% of the sales. Okay, sales was 375. Okay, which is 75,000. We subtract all of that, and we've got 170. Okay, it's strange that we have that. Okay, let's just go back. Profit markup is 20% on sales. Did they give you sales anywhere here? No, they didn't. Okay, so you had to work it out.
She's just in the left.
Yeah.
The only thing they gave you here was each partner is entitled to a salary of 4% of gross sales. Okay, so 4% of gross sales, which we know is 15,000. 15,000 is the salary. Okay, maybe actually, unless it's 4% of sales gives you the salary, but they both got the same salary, didn't they? Let's check that. No, they did. Both got the same salary. During the year, each partner received 15,000 as a salary. So yeah, they both got the same. And we know that the 15,000 is 4% of gross sales. Yeah, so there's nothing wrong with that. Okay. Reading it correctly. Alright, so I'm just going to use what I've got here. 10% of the distributable profit. There is no profit here in the question because it came out as a loss. Okay, so would they be entitled to a bonus here?
No.
No, so a bonus equal to 10% of the distributable profit is payable to M. Okay, so bonus to M would be, I would put 0 here, asterisk. Okay. No profit this year. Okay, so there wasn't a profit for this particular business. Okay, that is what they gave you there in the question. Okay. Right, and that's all they gave you. There weren't any other additional information points, so you had to work out these missing amounts in order to get the right figures, the right amounts. Alright, so now we've got that. We just need to now sum up. Okay, so appropriation is going to be sharing the profits. So which is the bigger side? Let's check. Equals. Sum up this side. And sum up the other side. Which side's bigger? Okay, the debit side is slightly bigger than the credit side. So is there a profit or a loss here?
There is a loss.
Correct. Okay, so each partner, capital M, capital V. Okay, we need to work out the difference. So let's work out the difference here. Okay, difference in the DR and CR equals. Okay, what is the difference? Let's check. Equals 76,350 less 75,410. 140. Sorry, 140 gives me that figure. Okay, that's the difference. But how are they sharing profits and losses? Did they say?
No, not that I saw.
Say somewhere. Did they? No, they didn't. Okay, problem. They left out some info. Okay, then you'd have to assume they're probably sharing it 50-50.
Yeah.
Okay, so again, not the best of questions, right? Asterisk, assuming they share 50-50. Okay, so they're sharing 50-50. Half of this is going to go there, and the other half will go there. Okay, capital M and capital V. That'll be a loss that they've sustained in this particular scenario. Okay, and that's the appropriation account. Okay, so lots of separate workings. Okay, and remember, these workings that you're doing here, and these workings that you're doing here, and these workings up here should carry marks. Okay, and that's why I'm showing everything, because in the exam, you don't know where they're going to be giving you marks. You need to make sure that you've done as much as possible in line with the information given in the question in order to build something that you could then provide for, okay, create or balance for.
Yes.
Okay, yeah, so with the information being given as is, okay, we didn't get those two figures tying up. Okay, profit for the year. Right, ideally you would want to see, if they've given you all the information, you would want to see that this is equal to that, profit for the year, and profit and loss, because that's the amount that's actually distributable to the partners. Okay, and that's question 1. Makes sense?
Yes.